Our next guest sees this bifurcation between the world's two largest powers having significant implications on how sovereign wealth funds invest well into the future. Joining us now is Winston Ma. He's the author of The Hunt for Unicorns and also the former MD and head of the North American office of CIC, the China Investment Corp, China's sovereign wealth fund. Winston, good morning from Asia. Pleasure to have you on the show. We'll get to your book in just a moment. It certainly plays into a lot of the themes we're seeing globally right now. But I guess let's use TikTok as a jumping off point and how that, as a tangible example, Winston, is perhaps playing into your area of expertise. What's going on?
Yeah. Thanks very much, David. Thanks for having me here. I think TikTok is a great case in today's market for various reasons. Number one, before we get into geopolitics, TikTok is a great example of the impact of the pandemic driving activities online, right? Because during the pandemic, of course, there's a huge increase in Zoom downloads as we're having this Zoom interview. It's probably less known to the public. During the first half of 2020, just after Zoom, TikTok was the second in downloads in terms of app downloads. So it's a very important case, right, showing the pandemic impact on digital activities going up. And then the second, obviously, you already touched on, is the geopolitics. The TikTok case highlighted the sensitivity of data, especially in a cross-border context. The important fact is, except for the U.S. company Apple, TikTok and its parent company ByteDance is the only other company that has large user base in both U.S. and China. So the TikTok case it can be viewed as a test case on cross-border data management. And then finally, the TikTok also showcased the risk of tech investment in today's market, in this high tension market, if you will, because if the TikTok case cannot be solved in a constructive way, the app has to be shut down, which means approximately 50 billion value will go like that. So, David, I think it can be a test case for many aspects of the new digital economy.
And a lot of these names, if not all of these big names, Winston, play into what your book is about, talking about how sovereign wealth funds, first, I guess, are a force to be reckoned with, if not already, obviously, across global financial markets. And second, how perhaps, do you think, I guess that's the question, do you think that sovereign wealth funds are indirectly being used as ways to further national interests?
Well, that's a question has been in the market ever since sovereign fund is being created, was created. During the last several decades, all the sovereign funds are saying we are financial investors, and they are they are trying to set the institutions up in a more market-oriented way. But at the same time, this government aspect is something inherent in these institutions, and it's just inevitable. So I think, David, I think the right way to look at this is we can never ignore the government aspect of these investment institutions. But the more important question is, how we can develop a scheme, some construct that these sovereign funds can be regulated and also become partners in transactions that can benefit the capital markets. And I think during the financial crisis, their capabilities to stabilize the market has been proven, right? Because in my case, I joined CIC during the last financial crisis. That's when CIC was created, and it made news because it invested billions into Morgan Stanley, which was struggling at the time. At the same time, the sovereign wealth funds in Singapore, in Middle East, also invested in Wall Street troubled banks such as Merrill Lynch and Citibank. So during last financial crisis, the sovereign funds have proved to be a stabilizing force. And during this financial crisis, the current crisis as we're going through right now, they still providing the stabilizing force to the capital markets with their long-term capital. And then, of course, at the same time, because of the sensitivity of cross-border data and tech transfer, their transactions are also receiving more regulatory scrutiny, right, from the host countries. So therefore, I think it's just the two sides of one institution that the world have to deal with. It's unlikely that we can just ignore that aspect, or we just overemphasize that aspect. But instead, if we have a balanced approach, we can make the best of these long-term capital.
I was going to ask you that because you were part of CIC, as you mentioned. Can you just very briefly take us through decision-making process in terms of making investments at CIC? And do you think, broadly speaking, sovereign wealth funds, their role, their dominant role, do you think now we're looking at more net disadvantages more than net benefits that they bring to the markets?
Yeah, interesting question. Certainly, the decision-making process at CIC is very similar to any other investment institutions. For direct investing, which I spend most of the time there, it's a two-step due diligence process. The first, the preliminary due diligence, and then you will go to the investment committee to get to the go-ahead, which means you can spend more money to engage financial advisors, accountants, so on and so forth, lawyers, for next level due diligence. And then you go to investment committee one more time to get the deal passed or not. So it's a two-step process, two investment committee meetings to get deal approved. Of course, if the deal is super complex, it may involve more additional steps in between. But overall, I think that's the process done in many other financial institutions as well.